Hi friends, so let's start with today's analysis. I think a very disappointing and a very boring market after the India's markets are concerned. I think it has been now almost 15 trading sessions or more where we are trading in a very small range of 24, 450 or let's say 500 to 25,000. So within those 500 points, I think the Nifty has spent around 20 days or so, and it has been a bit disappointing arrangement of Nifty because we have seen a lot of volatility in the last 6 to 7 months. Market going down very fast and moving up very fast, and now consolidating for such a large amount of time looks pretty boring as far as investors and traders are concerned. But the good thing for investors is that the small caps and mid caps have continuously outperformed the Nifty. Don't forget, we have spoken about this in last October, November, December a lot that people are saying that small caps and mid caps will not perform for next year. They will give negative returns. Stop your SIPs in small cap mid caps. But I've always told that small cap and mid caps is a reality. They will remain in this market. They will outperform Nifty and Bank Nifty most of the time because they are moving on pure fundamentals and pure news driven things. They don't have a player called FII who is majorly invested in the Nifty stock because they're able to manage the Nifty stocks. So whenever they want to book profits, they will have short positions on Nifty and Bank Nifty, and they will keep on selling their demat shares. If they want to rise the market, they will have long positions in options, Bank Nifty and Nifty, and they will keep on buying stocks into their portfolio or into their demat account. So that is how the Nifty and Bank Nifty remains very much managed. DIs or retail players are not able to compete with the FI's money power in the Nifty and Bank Nifty. The sole driver of Nifty and Bank Nifty remains purely in the hands of FIs and nobody is able to compete. That is why these indexes dance on the team of FIs. So it's very difficult to sometimes becomes very difficult to track or to you know uh, anticipate the movements of Nifty and Bank Nifty because they will always tend to surprise you. That is why we say the markets are cruel and they're not allowed to make money because they are they are managed in such a way that you are surprised, and that is why it's very difficult for normal people to make money. The problem is derivatives are a zero sum game. So if FIs have to make money, the retailers and HNIs and TIs have to lose money. It's as simple as a thing. So that is the reason why, and whereas stocks, everybody gains because the overall market cap of the stock goes up, and that's why everybody can be a gainer. Gainer, it cannot be. It is not necessarily to be a zero sum game. But derivative is purely zero sum game because somebody is buying or taking a long position, somebody is taking a short position. If somebody is selling an option, and somebody is buying an option, and both cannot go up, right? But in the stocks, it is very much possible. Sorry, it is just possible that the person who is selling his stock will have less profit or will selling his loss. But as the market cap of the company keeps on rising and the stock price keeps on rising, ultimately everybody makes money because you cannot take any short positions in the cash market. It's only a 1 day or intraday. You technically everybody is long in stocks. If you're holding overnight, that means everybody is long in stock. That is why everybody gains, but it's not the same in derivative. And that is the play which the FIs do. So you must be noticing that the VIX was pretty high for last 10-15 days because a lot of action was taken to the option market. That is why you see that although the FIs were short in the Nifty or let's say the derivative market, but they were playing their game in the option market. We have spoken many number of times that options data is something which cannot be given or it's not given by NSE in granularity. It means if the FIs were they buying puts, they're buying calls, they're shorting puts, we don't know overall what positions they have taken. That becomes extremely difficult to find out. Even if you see the NSE options data, what you're seeing is how many contracts are written in calls and how many contracts are written in puts. But you do and you assume that those are all sell figures, which means that we are anticipating that those are call writers data, which means there are call short and there are put short. But that is not necessary. A contract of put can also be set by buying a put or buying a call. So this bifurcation in the call or put data analysis is not there. So you never know whether exactly those are all sell of calls or there are some buy of calls as well. Similarly in the put data. That is the major problem and that is the major play which now FIS does, because this data is never in public and you never know what kind of positions FIS have taken. So now you can assume, or now you can at least predict, or now you can conclude that the FIs have been taking a lot of calls and puts short. Even they bought long calls and long puts also, because they were moving the market in a spin based direction. So ultimately, they will suppose they buy a lot of calls, they will take the Nifty forward to 500 points. Then they will sell off their calls, they will do a lot of call writing and they will buy puts. Now when the market goes 500 points, they're buying, they're making money. That is how they. I mean, I'm pretty sure they have made huge sums of money by keeping Nifty in that very small 500 point range. So derivative market is purely driven by FIA. There is nobody in the world, either India, who can defeat them or who can have any clue whatsoever what FIs are doing. They are so smart. They bring in so much element of surprise that it's very difficult to find out exactly what FIs have to do. So always concentrate on the fundamentals. Do not play intraday games. Be a positional player. That actually helps you to at least gain a long term. The short term, the FIs will try to fool you. But the long term, they have a trend. It's not that they go below the trend. They have what we call as a primary, primary move. Or let's say the primary uh, trend which is going on, and then you have the small secondary and tertiary trends. So if you just follow the primary trend and just remain with those flows, then I think it's very easy to tackle this kind of volatility and this kind of movement. But if you are trying to put your energy and money in those secondary trends and tertiary trends, for example, if you see the long term monthly trend activity moving upwards, in between you will have some weekly trends which are going down, and then you will have those daily trends which are very volatile nowadays. So that is how those 1, 2, 3 trends are there. But try to remain on the positional basis on the primary trend. That is why I always tell you that is the best way of looking at the markets. I've been telling a lot of number of times that I am not seeing the market going forward beyond 20,000 very fast. And I told you to remain on the sidelines a number of times. And you see nothing the market has done for last 15 days. So I'm sitting on the sideline for 15 days, and I have if I just assume that I've gone on a holiday 15 days and today if I open the market, it is exactly wherever I left it. Nothing has changed. Nothing has changed absolutely, but people who would have been trying to do a lot of intraday stuff, by seeing all those cash sell buy figures, then options, for example, derivative buy sell figures would have always remained confused, because the play is happening in the options market. It is not happening in the cash market, or it is not happening in the in the derivatives market. It's all happening in the options market. That is the place where people are being tricked. So having said this, let's just briefly talk about what the international market, and then we come on to the Indian markets in a slightly lengthier way for the June series. How we are seeing at this June market. So a lot of news flow. I'm not going to do, because you must be aware of the thing. But some important points, like yesterday what happened is that the lower court gave a order on Mr. Trump for holding the tariff war. This was not, because they told it's unconstitutional. They should have taken the permission from the Congress. They have not done that. And Trump has no authority to sign on this. This declarations of tariffs from various countries. Don't forget, in USA you have a federal court which can overrule, we call as lower court, and then you have something called like the Supreme Court, and higher version of the US Senate as well. So problem is, uh, in the federal court, which is in India's terminology is higher court, the positions are actually politically nominated. So the ruling party has a edge, and in Supreme Court, it's the highest court in US, there you have very much influence of the political influence, because Those are all elected members from the ruling party, most of them. So that is why it's very less chance that these kind of tariffs, will remain suspended. I think they'll be on, and I think all permissions will be taken from the court. And if even if the court does not give the permission, which looks like slightly tough, but still manageable, even if they don't do that, they will always try to. They still have majority in Senate and Congress, so they will always be able to pass also these things. Although problem is it will take a lot of time because we do it for 150 countries. That might take some time. Otherwise, these all things should remain. And as of now, the High Court of US have ruled out any such removal of the tariff is in place. So now, having said this, the problem again reoccurs. Yesterday was slight fight again with Trump and Mr. Powell. Trump was saying it's high time to start cutting the interest rates. Mr. Powell says that the data is not showing that, and I'm driven only by data and I'll not be politically driven at all. Which means that Fed will follow its path and Trump will follow its path. So Trump will keep on doing things which he thinks is right, and probably he knows on truth, which is also that uh, he has been nominated by God to do good, great things in America, and he will continue to do so. Nobody can stop him. So, as usual, Mr. Trump has taken this on his ego, and I don't think any court ruling will be able to stop the tariff, or the tariff will be there. Which means that the work for Federal Reserve will keep on become tougher. They will keep on watch. They will first watch the data, and then when they're confident, they'll start cutting the rates. Also, yesterday we got numbers from unemployment numbers. Jobless claim data which was very high at 2.4 lakhs. The GDP numbers came from US, which showed that it contracted by 0.2%. The last quarter it contracted by 0.3%. Now it is this month. It is showing 0.2%, which means this quarter is looking for a contracted growth. And now we have a lot of numbers lined up today also, that your consumer sentiment data and jobs data, etc., etc. So a lot of data from US, but it is all showing a direction of what is anticipated: slower growth, higher unemployment, and losing confidence of most of the investors, which is being shown the dollar index, which is moving flip-flop from 98 to 101. That's the range, but more or less it is staying below 100, which means money is actually flowing out of US. It is not remaining within the US system, and money is trying to find alternate paths here and there. So, according to me, the money in the US market should not remain much, which means although US market should remain elevated. I'm not saying that, but the problem is it will not be the only story now. There will be alternatives. So, the alternative which came into the minds of many people was gold, which now people are getting tired of because they're seeing it getting very overvalued. Bonds, US bonds, not people are not interested in buying invest. Anyway, they are selling in the bonds, so which means bond money is also into the market. Uh, Japanese bonds are actually trading at all-time high bond yields. So there's hardly any scope there as well. So it is looking for emerging market, looking for emerging currencies here and there. Bitcoins are moving up. That is how the money is floating around. But and don't forget, US markets are extremely, extremely overvalued. Now US markets, we talk about Dow, they're trading, or let's say S&P, they're trading at around 23, 24 times the forward earnings, which is very huge. For a country like US, trading at 20, 24 times the forward earnings, and a GDP growth of let's say around 1.5%, unemployment numbers going up, dollar index going down, losing investor confidence, it's not a good thing. And I don't think US market should remain so elevated. But the problem is the earnings have been good for this quarter also. The earnings are anticipated to be good for next quarter also. Nvidia has given splendid set of numbers in spite of their problems in China, where they're getting problems in terms of orders and all those things. But still, they are beating all those expectations, and I mean they're doing splendid well. So, and these all companies have very high weightage in Nasdaq and FI and S&P, and that is why the indices are keeping afloated. So, on an index point of view, US markets look still stronger, although if you go deep into it, they are miserably weak, and I don't think US market should be bought at these levels. I think they're waiting for a correction. They're waiting for some big event to happen, and many people are predicting some big events to happen in this calendar year. Let's see whether it happens or not. So, US markets look spectacle, but since buying is a lot of liquidity is there. I think the markets are being floated. They're keeping a lot of retailers' money is also going to the US market. So that is why the US markets are actually very buoyant, and we are not seeing a big dips. Coming to the Indian markets now, so India, we just now got a news that GDP growth has come to 7.4% for last quarter of FY25, which is a very pleasant surprise because most of the economists were anticipating a GDP growth of around 6.8 to 6.9%. We got 0.5% higher, and that was also being reflected in some kind of results also because they beaten the estimates of -2% to actually plus 4 to 5% of the Nifty earnings. So earnings, as we see, is purely a mathematical derivative of GDP growth, and has come out to be good. Now the conditions are even better for the GDP growth, but the government has told that the full year guidance for FY20 will remain at 6.5%, and they've actually reduced the nominal GDP growth from 9.8 to 9.7%. The normal GDP contains the real GDP growth plus inflation. Because the inflation target has been reduced a lot, that is why the normal GDP growth forecast has been cut down, which means that Nifty earnings will also be slightly lower if we talk about FY26 because the inflation is lower. If inflation is lower, generally the Nifty earnings also remain slightly lower. It is the bottom line. So it's the top line because you don't able to price the thing in that way. So now coming to the derivatives data of this June series, FI has started with 80% short, net short, and there are around 75,000 contracts net short now. Only 20% long, so extremely low long position for June series. Interestingly, there is a lot of put writing in the Bank Nifty 56,000 put, which means that Bank Nifty should cross in this series beyond 56,000, and we should anticipate a target of around 57,000 to 57,500 if it does that. So Bank Nifty is one element which is getting stronger. Although there is call writing also, but there is no in the money call writing. This was in the money put writing, and that is why you saw today also Bank Nifty performing better than Nifty, even in today's market. So now the problem is we have a dichotomy here. So on Nifty they are short, but the Bank Nifty they are actually not so short, and more, more importantly, they have a put short in the money put of 56,000, which means that FIIs will try to cover their shorts and then take the markets forward. This is a very likely scenario. Moreover, I think the put writing in the Bank Nifty can also be there because of the 6th June MPC meeting which is due, which means the markets are anticipating a decent cut. Some economists are saying we can get 0.5% cut also on the interest rate because the inflation is very benign. But since the Q4 GDP number has come to 7.4%, the prudency does not say that we should get a 0.5% cut. According to me, we should get 0.25% cut only because the GDP growth has come again on track, and we are poised to get that 6.5% GDP growth for the entire FY26 as we are moving forward because of many factors which we were discussing right through last 2 months or so. So now with derivative markets, if the Nifty is so much of short, then two scenarios can emerge. One is that you get some good news and you see a lot of short covering and the markets could reach 25,500 to 26,000. Or the FIIs actually want to take the Nifty down to cover their shorts or to gain profit in shorts and then take the market forwards. Or let's say June series can actually be a negative series also. The reason is because the last 3 series have been positive, which means March series is positive, April series is positive, and May series is positive. So we saw 5 consecutive down series right from October, November, December, January, February, and now we have 3 series in positive, which is March, April, and May. So there are chances that if at all they want to gain profits in the short positions, then they will try to take the Nifty downwards. Or if they want to really gain or take the market forward, then they have to cover their shorts and take it to a higher level. But knowing FIIs and knowing my feeling, one time Nifty should touch around 25,400 or below. This will help in 2 ways. See, most of the stop losses of the long positions are placed at 20 timer. because a lot of people are saying 20 DEMA is being being supported or it's being defended number of times. This is known to FIs also that a lot of stop losses are placed there. So there might be a chance of stop loss hunting there. With some bad news here and there, they actually crash the market, take it below 24,000, let's say 500, or let's say around those levels. Then they cover their shorts and take the market forward to a next level, which can be 20,500 or 26,000, whatever it is. This looks a very likely scenario according to me, and I don't expect that the market should go immediately higher, because अगर ऐसा होता, there was no reason why they should have carried their shorts. They could have done their short covering in last series itself, or they could have disposed of their shorts there itself and taken some long positions in this new series. And today, first day of the series, they should not have taken. They should have not taken the Nifty downwards. First day of the series, Nifty downwards. If Monday also you see the low of today being broken, then I think the Nifty is going downwards for some point of time. To what level I can't say, but at least below 20 DEMA, that much I can say. The market will go down below that. Stop loss hunting will be there. Stop loss already triggered, and then the market can reverse. This is what the FIs generally do. This is what their mindset is. This is what they are fond of doing. So that can be one scenario. According to me, this scenario looks more, I would say, more, prominent, or let's say more chances, or more prominent, more probable. Now, what should we do? See, since we have chances of market going up also 1,000 points and down also 1,000 points, I would suggest that you buy call or put at the same level. You can make a strangle out of it and buy, put, and call at this same instance and wait for a bigger move. It is 100% sure that you get a bigger move of 1,000 points either ways, either upward or downward. And I will not be surprised. In fact, my base case scenario is that you will get a 2,000 points range, or let's say 1500, 1600 points range on the downside as well as up to upside. So markets may see first half being downwards, or let's say first half being upwards and second half being downwards, or vice versa. Both the scenarios are possible, definitely will happen. The data and the mindset of FIs are absolutely showing that. This is what I can think of. Now, so this is one strategy we can do. Or if you want to be a positional player, wait for some kind of correction around below 20 DEMA and then enter there and then remain positionally long. That means second strategy. If the markets go up too much, you can have short positions to enjoy the down phase of Nifty because FIs are still short to a larger extent. और ऐसा कभी नहीं होता है कि FI short हो. And today the VIX has also gone down. Although it was recovered in second half, that actually surprised me. But in the morning we saw a lot of positions getting squared off. In fact, the VIX was down by around 8% in one point of time. So, which means options were getting released. And now we can assume that a lot of action will be taken in the futures market. अब ऐसा लग रहा है क्योंकि VIX has come around 16 or so. If it comes around 15 or so, which means now the game will be in futures, which means the Nifty will have a higher range of 1,500 points plus either side total of this month. So मेरा base case scenario यही है, and I think we are still poised for that. Rest all things are looking good. Dollar index is still down. Bond yields are still hovering at a higher range of 4.5%, which is not good. US is still in turmoil. I don't expect things to improve there very fast. China is still not looking good because of tariffs and the other GDP growth numbers, etc. US GDP is contracting, but India GDP is going forward. India is still the highest GDP growth nation. And don't forget, now with the fourth largest economy and growing at more than around, let's say, even if you take the estimate of the government of 9.8% normal GDP growth, 9.7%, then also we are much, much higher than any other country. So India remains a favorite destination. We are moving towards 28,000 Nifty for this current year, for this financial year. That is very much in the cards. So any dip should be bought and taken advantage of. This is purely a buy on dip market now. Don't get trapped in short positions. Short position thoda khel milta hai. Some money you will get it, but the major money is to be made in the long positions. This is purely a buy and dip market. Any news, anything which you get on a dip, buy it and hold for a positional basis. Don't play intraday. That's my advice. So this was the analysis for the markets, Nifty and overall global markets. I hope you would have liked the video. Thank you so much for watching. Thanks so much.